All right, let's dive right in. Today, we're going to put on our detective hats. We're cracking the code on a single stock's technical report to figure out what are the charts really trying to tell us. So, first up, just look at this number, 98.62%. Let that hang in the air for a second. It's a huge figure, right? And it is the absolute key to our entire investigation today. But what does it actually mean? Well, it means that our stock in question, Waterstone Financial, ticker symbol WSBF, is trading just a tiny fraction away from its absolute peak price for the entire year. It's literally knocking on the door of a major breakout. And this leads us to the central mystery we've got to solve. And that right there is the million-dollar question, isn't it? Are we looking at a rocket ship that's just getting its engines fired up with a lot more room to run? Or is this a classic case of a stock getting way too hot right before it all comes tumbling down? That's what we're here to figure out by digging into the evidence. Okay, so let's get our investigation started. First things first, let's look at the basic facts of the case. Our subject, Waterstone Financial, is clearly having a big moment. It gained over 2.5% in just one day to hit this really critical price level. Now, here's our first real clue, the volume. You can see right here, the stock is trading on 69% more volume than it usually does. Now, in the world of technical analysis, that is a huge deal. You see, breakouts that happen on high volume like this, they're considered way more reliable because it shows that traders are serious. They have real conviction. So our first clue is definitely pointing towards genuine strength. All right, let's move on and see where this clue takes us. For this next part, we're going to assemble all the evidence that makes a strong case for the bulls. All the reasons why the price might just keep on climbing. Okay, check this out. What you're seeing here is a classic bullish signal. They call it the golden alignment of moving averages. And honestly, the best way to think about it is like stacking blocks. You've got your fast, short-term averages right on top. Then they're sitting on the medium-term ones in the middle, and holding it all up is that solid long-term base. When you see this kind of perfect stack, that is a textbook sign of a really healthy, sustained uptrend. And the bullish evidence just keeps piling up. The ADX, which is a tool to measure how strong a trend is, shows this move is both strong and well-defined. Then you have the Arund indicator. It's at a perfect 100, which signals complete bull control. The MACD, another key indicator, isn't just positive, it's accelerating. And maybe the most important piece of the puzzle, the money flow index confirms that real cash, real capital, is pouring into this stock. Yeah, the case for the bulls is looking pretty solid. But, any good detective always has to consider all the evidence. And there's this famous saying in trading that reminds us that even the strongest trends, will they eventually run into trouble? So we have to ask ourselves, are there any clues pointing in the other direction? And that brings us to the next phase of our investigation. Let's totally shift gears here and start looking for any warning signs. Any little pieces of data that might tell us to pump the brakes before we jump on this bullish bandwagon. And boom, here it is, our first major red flag. The price has actually pushed outside of its upper Bollinger Band. Now, the easiest way to picture this is to think of a rubber band that's been stretched to its absolute limit. Statistically speaking, the price is now overextended, and those bands have a funny way of snapping the price back towards the middle. This whole idea is based on a core financial theory called reversion to the mean. And it's pretty simple, really. The theory says that prices, which often get pushed to extremes by either a lot of excitement or a lot of fear, don't stay there forever. Eventually, they get pulled back toward their long-term average. And a price popping outside the Bollinger Bands, that's a perfect example of the kind of extreme move this theory warns us about. And look, other warning lights are starting to flash too. Think of these momentum indicators like the tachometer in your car. The RSI, or the Relative Strength Index, is getting really close to that overbought red line. Meanwhile, the stochastic oscillator is already deep in the red zone at almost 90. This kind of suggests the engine of this rally is running super hot and, well, it might just need to cool down a bit. So what do we have? We've got a pile of evidence that supports a continued bull run, but we also have a few really serious warning signs suggesting a pullback could be right around the corner. So now it's time to weigh all the clues and deliver the final verdict from the source report. And here we have it. The verdict is in. Despite those red flags we just talked about, the overall technical score is a very strong 77%, which lands it firmly in the strong bullish camp.
So, the key takeaway here is that while a short-term pullback is a very real risk, the weight of the evidence still suggests the underlying trend is powerful.
So, what's a trader supposed to do with all this? Well, they watch these key levels. These are the battle lines. The bulls want to push the price up towards that 1919 resistance level. But to do that, they absolutely have to defend the pivot point at 1843. If they can't hold that line, then 1799 becomes the next line of defense. So the case is basically solved. The analyst's strategy is crystal clear. The bull run is real, it's strong, but because the stock is so overextended, the risk of a minor pullback is high. So a savvy approach might be to wait for the price to dip a little, successfully test one of those support levels, and then consider getting in, with that ultimate target still being the 1919 resistance level. And that pretty much wraps up our investigation. We've cracked the code of this technical report, and we understand the story that the numbers are telling us right now. But it does leave us with one last question to chew on. While all this analysis helps us understand the present, can numbers alone ever really be a crystal ball for the future? Something to think about. Thanks for joining me for this one.